2 million Bitcoin could be absorbed by just one single entity called strategy. This means there is a constant bid on the Bitcoin price and the complete structure will change. Today's guest, Fab, is arguing that the 4-year cycle is dead. Even though it's not technically dead, you can already say goodbye to the 4-year cycle. And in the second half of the podcast, we will talk about the massive deflationary force that AI plus Bitcoin will bring to this upcoming capital shift, and why we believe that AI is actually accelerating the Bitcoin adoption. Enjoy. I want to talk about Bitcoin, what was 2025 happening, what we're expecting for 2026, and maybe even some, as it gets to be a routine topic now on the podcast, stretch and strategy on the end. But maybe let's get just started with 2025. What have you seen last year? What are you kind of expecting? Were you disappointed of what's been happening in Bitcoin in the last like 1-2 years?
Oh, I guess disappointed might be the wrong term. I think many of us expected a higher peak in the bull run. But what we already know to expect is to never know what is going to happen with Bitcoin. So that is what happened, I'd say. Although it looks like it, I'm pretty sure the 4-year cycle, as we know it, is dead. I know everything looks like it's still intact, and everyone was surprised, but I still think it's dead. At least if you are trying to connect it to like the halving cycles, I think there's enough data to make the conclusion that it's more dependent on economic cycles, money printing cycles, etc. I think it was more of a coincidence that the halving cycles and those economic cycles have been pretty parallel over the last, I don't know, decade or so. Yeah, so not really disappointed, but let's say surprised about the extreme speed that institutional adoption was happening in the last year and the beginning of this year, which did not really show up in price action. Like if you look at today's price, that, to be honest, was or is pretty surprising. And at the same time, I have the feeling that we now really see that the masses, like retail, seems to be missing this completely. I mean, what your goal and my goal with Bitcoin content and educational stuff is to bring as many normal people as possible to Bitcoin, and with what we're seeing now, like institutions building their whole business models around how do I say this? Bringing Bitcoin into the normal financial world, the classical financial world, retail totally seems to be missing the point again. Interest in buying Bitcoin from usual retail people is at very bad levels, I'd say, compared to how states, how companies, etc., big institutions seem to be grasping what Bitcoin is.
Yeah, I think also, I don't know, maybe you actually have more insights than me with Coinfinity and the things that you're seeing. Do you think that retail kind of just like slept on this year's bull cycle or the last year's bull cycle? That's kind of my theory, because it was like a little bit more dampened. There was not that excitement in there. All the social graphs of like gauging how much interest there was actually in Bitcoin is not as high as it was 2017, 2021. And I have that theory that without the institutional adoption, we would have probably not even seen the 126K, and we would have probably not even seen, we would have probably seen lower lows. It would have been a bigger bear market or bigger crash up until now. And with with retail included, we would have been a lot higher. Is that something that you're also seeing, that retail just kind of slept on the last bull cycle for some reason?
I mean, what we've been seeing at Coinfinity is during the bull market last year, and then first crashes, our customers were pretty active. But those are our customers, of course. And we've been growing a lot, but this still is nothing compared to like retail masses. You know what I mean? I see it exactly the way that you do, that in the bull market last year and the top we've had at, what was it, 126K or so, retail wasn't even here yet. Like nobody was interested in Bitcoin. You have seen some headlines of Bitcoin crossing 100K, but we were so far away from like those big, let's call it retail bubbles where everyone is talking about it, and your taxi driver recommends you to buy shitcoin ABC. We've been so far away from that. That was pretty surprising. But right now, after the all-time high, after the first downturns, now probably maybe being in a bear market, we see that retail interest is even lower. Like nobody cares about Bitcoin at the moment, which is really surprising, given the fundamentals we have been talking about like a couple of minutes ago. I guess for us Bitcoiners, it seems to be just insane that I mean, when you and I joined the space, fundamentals were way worse than they are today. I think there has never been a point in time where Bitcoin's future seemed to be more bright from an adoption standpoint, but nonetheless, retail just doesn't care. One of the problems why that is might be that I mean, you see what's going on in the world, right? There's the new current thing all 1 to 3 months. Now we have several wars going on. Nobody knows where we're heading. Prices increase, fuel prices increase. People might not even have any spare money to invest into Bitcoin, and maybe have fears of what's going down in the next, I don't know, year or so. That might be the problem. People maybe don't even have the mental capacity to open up to a better monetary system when everything around them is just cracking and breaking down, which is very ironic because it would just be the thing helping them to opt out of this absolute craze.
I also have an interesting theory of Bitcoin just not being for the masses at this point, where Bitcoin is just too volatile. There's more than one question that you have to answer to get to what Bitcoin actually is and to understand why you should invest in it. And that's why it's too complicated for the masses. That's why we will always, as long as Bitcoin is as niche and complicated and volatile as it is right now, I think most people will just be disappointed at the first glance and then not buy it. That's why I'm really curious, and I wanted to get into it later, but maybe it's now a better time, with products like Stretch. Because when you think about it, how will the masses adopt something? Like when the email servers came out, we all thought we will all run our own email server at home. But then came Gmail and it made it super easy, super nice, and like that was the best case for the masses. And now if you want to have sovereignty, you can still run your own email server. You can still be as sovereign and run kind of open source projects rather than using Gmail. The same I see it a little bit with Bitcoin, where the people that care a lot about sovereignty, the weirdos like the two of us that really care about Bitcoin deeply and the sovereignty rights and all the things that come with having base layer Bitcoin exposure, they will always have majority of their wealth in Bitcoin. I always have that. I just told you before the recording, I started DCAing a little bit into strategy, but my golden rule is 80% plus of my wealth has to be in Bitcoin self-custody. That's the golden rule. That's the wall that I'm not gonna break down. But I think we are the exception, not the mass coming into Bitcoin. And so my kind of theory is that the masses will just come into with nice products that give them some yield, 11%, 5%, 15%, whatever is the yield that people are getting with those products. The masses will come on with things that they don't even have a clue that there's Bitcoin behind it. They're just like, oh yeah, like there's this bank account, pays me 10%, I'm happy. And that's what it is. Maybe not in 100 years, but maybe that's the future for the next 20 years, 10 years, whatever it is, kind of the bridge towards the Bitcoin standard. How do you see that?
Pretty similar, I'd say. The masses are just they're exactly working like that. You need to put the products. They need to be easy to use, easy to understand. For example, most of the people were not happy that the internet exists, and were like, "Oh wow, information is free now. That's great." They were like, "Oh, Facebook, nice. I can hang on this website all day. I can stalk my friends. I can do whatever things like Facebook and social media gave such a huge push to the internet, and not because people wanted to enjoy the freedom of information, but there were products built for them, or products built that they found interesting and that they wanted to use and wanted to spend their time with. And as you mentioned, a stretch, we've been talking about it a couple of minutes before we started the show. You can criticize strategy, you can criticize Seyr. I understand when people say like they find it frightening how many Bitcoin a strategy accumulates. All fair, but this, especially the stretch product, for me, this seems to be one of the biggest Trojan horses that was ever built around Bitcoin. Because, I mean, Bitcoin will not have a CAGR of 30% forever, right? I mean, like in 100 years, that's very unlikely that Bitcoin is still performing like this if most of the people use it or save in it. But in the meantime, like the next 5 to 10 years, a Bitcoin CAGR between, I don't know, 20 and 30% might be very likely. And this makes the stretch product unbelievably genius. Like with the now 10 or I guess 11 or even 11.5% dividends paid monthly, you will accumulate and attract so much capital from the world, from people all over the world in all branches, because they just want to have this calculable cash flow. That's how most people work and how they want their life. They want it. They want to be able to plan for the coming months or years, to plan their cash flows. And for a lot of people, Bitcoin is way too volatile. So what Seyr does with the stretch product is, let's just say we will have a 25% CAGR over the next years. So what Seyr does is giving you 10 or 11% and just having the difference of like 14 to 15% for strategy, just as an ROI. That's just what they will have in. What they will have more in higher purchasing power than they will have to pay out to their stretch shareholders, which is just insane. He sells the recurring cash flow and gets like more than 10% just on that product, almost 15%, which is crazy in my opinion, and it will attract billions, trillions of capital. And I'm pretty surprised that nobody does understand this. We are Bitcoiners ourselves, and I understand every critique on that, and I understand if you don't want to hold it. Yeah, of course, that makes sense. You have a middleman again, etc. but this will attract so much normie and mainstream capital. I think nobody really understands the implication of products like this.
Yeah, but the one thing that I actually find frightening, especially when I see how fast they're accumulating Bitcoin is, like they already have what 3.5, soon 4% of the supply. If you just see the Bitcoin yield that they are still able to get and see how many more Bitcoin they can accumulate, I mean, I made the calculations. I'm like, they could potentially have 2 million Bitcoin on the balance sheet. I found it crazy to think about that they can have 1%. Like when I first looked into strategy, they had like about 100,000 Bitcoin, and I actually was on a space, I think, back then. And someone asked me like, how many Bitcoin do you think? Do you think that strategy can get to 1% of the Bitcoin supply? Now it seems almost ridiculous. Now it seems almost like laughable to say that, but because they ran to 1% and 2% and 3.5%, and I think now they are a little bit over 3.5%, and it's kind of like, what if they get to 1 million and 2 million Bitcoin? It doesn't seem that crazy anymore. I mean, maybe, but like 1 million doesn't seem that crazy, and 1 million is already a lot with a fixed supply where there's only 21 million, where likely 2, 3, 4 million, I don't know how many, are lost forever, mostly probably lost forever. And it's like, what does this mean if like one player has so many of the Bitcoin? I mean, maybe it's similar with gold, where also the US Treasury has a lot of the gold, and big players like the Federal Reserves of the world have a lot of the gold supply versus how much there is in private hands. Maybe that's comparable. I don't know the gold numbers, but how do you look at that one player has already so many of the Bitcoin?
I mean, of course, there's some danger to it. Holding a lot of Bitcoin doesn't necessarily give you a lot of control over the network, but you have to admit that, of course, at some point you have a lot of economic power to the network, which might be of advantage when there are talks about soft or hard forks and stuff like that, right? Seyr might decide for all of Strategy's capital what fork to lead if we might have a hard fork upcoming, and that might be some kind of danger. If you then add like BlackRock or so, whose ETFs will get bigger and bigger and bigger, and then you have like two very, very big entities, and which could go in talks with each other and say like, okay, we are going to support this hard fork because it's better for us. Our shareholders are not able to decide on that, so we might, which is a lot of economic power that you can't neglect that. That's definitely the case. But still, it doesn't like give you any actual control power over deciding what will others do with their nodes and which rules will they follow. But just to return to Stretch for a quick moment, I don't know, I'm pretty sure you do know the article from Pierre Rochard, A Speculative Attack, that he wrote in 2014, in which he explains what a speculative attack on the US dollar would be, and what Bitcoin's role could be on that. Like if you for yourself draw the conclusion that Bitcoin will win, how you could do this speculative attack on the dollar. And to be honest, the Stretch product from Strategy is the biggest step towards such a speculative attack I have seen so far. I mean, that thing is insane. It's built to just gobble up US dollars and buy Bitcoin with it. That's pretty crazy. And if you are a Bitcoiner and therefore hate Strategy, maybe just think about it like that. There's someone with way more capital than you doing this speculative attack. Pierre Rochard has been talking about like 12 years ago, which is insane.
Interesting, yeah. I love that view. And that's actually the only big risk I currently see with strategy, that TradFi is fighting them. Because if you think about it, you can keep your money at the bank, get nothing for it. I mean, you can put it in bonds, get nothing for it, or you can put it into Bitcoin, which at least you get something for that. Like at least you get, yeah, maybe if inflation is 7%, and with after taxes you get with the stretch product in Europe also like your 7-8%. Maybe that's not amazing, not like Bitcoin, but at least you're getting away more than losing against inflation, losing against your purchasing power.
Exactly.
And the outflows of all the bank accounts, that's crazy to imagine.
That's crazy. I mean, if you have, let's fast forward, I don't know, 3 to 4 years, and you have, I don't know, 4 or 5 years of stretch history in paying out dividends, not imploding. Why should anyone on earth hold any dividend stock that pays you, I don't know, 2.5%, any real estate investment trust REIT that pays you, I don't know, 3.5%, where you have basically the same middleman risk, but way less dividend. That is the reason why I think in the long term this product may absolutely explode. But another interesting point is, and that's why I mentioned this a couple of minutes ago, I'd be curious how Seyr wants to handle this product over time, because the more Bitcoin gets adopted, the less those 20%, 30% CAGRs are realistic. So that means over time, like in 10 years, 15 years, maybe he might have to go down with the dividend more and more and more and more and more, or let the holders convert it just to strategy shares, because you will not be able to pay this dividend forever. I mean, I'm sure you're of the same opinion. If we're in a Bitcoin standard, there's no way that thing can pay 11.5%.
Yeah, this is also the biggest difference that I see between Bitcoin and strategy. If you ask me, what are you comfortable holding the next 10 years? I'm comfortable holding both of them. When you ask me, what are you comfortable holding the next 100 years? What are you comfortable giving your great-great-grandson? Like, it's Bitcoin, it's not strategy. Because yeah, probably it's still around, especially if they accumulate Bitcoin. And also there's the question that sometimes comes up in podcasts like, oh, what will strategy do then if they have 2 million Bitcoin? Yeah, the answer is like, whatever the fuck they want. They have 2 million Bitcoin. They can literally do whatever they want with that.
Yeah, sorry.
Go ahead.
I just wanted to add, don't get me wrong, I'm not like a strategy or Seyr fan, and to be honest, it's for me that's just a Bitcoin sideline story. I find it interesting to watch, but you have to be honest and say credit where credit is due from a financial instrument standpoint. Like, these products are pretty well engineered, I'd say.
Yeah, 100%. And yeah, that's the point of like, that's why I'm having that wall with, like, I want most of my wealth, 80+% in Bitcoin self-custody, because this is the wealth that I can see being still there in 200 years. With companies, you never know. Like, see the biggest company of the world right now, I think it's Apple, Nvidia. I don't know which one is currently the first one of them too, I guess. They were not even around like 30 years. I mean, Apple was probably still in the founding phase, but they were a lot smaller, and there were other companies that won the number 1 and number 2 space. Then go 100 years back, like, there was no Apple, there was no Microsoft, the internet wasn't even there in the current form. So it's like, you never know if a company actually survives like 100, 200 years. Then most likely the companies will survive that adopt a sound money standard like Bitcoin and like take advantage of that early. But that's always that I really want to stress that like that strategy, because some people are just like switching 100% to strategy. I'm like, you are throwing away all the generation who have all the things that you're understanding with Bitcoin, all the sovereignty rights, especially now, that's not a good idea. If you kind of want to mix it by, like, I'll just buy a few strategy things here and there, or have a stretch as my cash reserve, because I think we also should have an honest conversation about having cash instead of like being like 100% into Bitcoin, which I was in the last couple of years. And I'm now slowly diverting into like, there is a place in your portfolio for just cold hard cash, cash meaning like euros or dollars, wherever you are, and maybe stretch is a part of that cash portfolio where you not get 0% or 1%, but you get 7-8% after the taxes in Europe, and 11% in America, depending on what state. There's also different tax rules there. But yeah, I see more of that in that lens, that it's kind of a spice mixed in and not the main meal, the strategy.
I see, and I mostly agree with that. I also would not recommend, without giving any financial advice, of course, would not recommend people on throwing away the sovereignty rights that Bitcoin gives you, just for the idea of maybe having a couple of percent more purchasing power increase. That doesn't make any sense, in my opinion.
We also talked before about Bitcoin being more macro driven, and I heard that more and more. Do you think that's a good thing, that like we have now Bitcoin as a big asset that is now more depending on the money supply, more depending on like what's actually happening on a macro side, and less on like, oh, like there's this billionaire coming into Bitcoin now. I think small narratives like that. If you live in Europe like I do and want to buy Bitcoin the right way, check out Relai. Relai is a Bitcoin-only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works: buying Bitcoin on a consistent basis. Relai is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug pulling whatsoever. I have been a long-term fan of Relai, not only because it's incredible easy to use and very beginner friendly, but also because it just works. If you want to get started with Relai today, click the link down in the pinned comment or in the description, and once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relai app and get cheaper Bitcoin if you use code Robin. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi.
I wouldn't call it a good or bad thing. It's just a thing that was inevitable when Bitcoin is going to fulfill its let's say its fate, becoming what we want it to become, like the global monetary protocol. And on this way, as you know, Bitcoin is permissionless and everyone can use Bitcoin. So even the institutions we do not like, and at a certain size, it just becomes a macroeconomic tool and indicator. We cannot prevent that. And people that want to prevent it from that maybe never really wanted it to be a globally used monetary system. So if you want Bitcoin to forever be the niche money, I understand that from certain points of view, but like from certain maybe cypherpunk points of view, but from a point of view looking at economics, looking at the society, looking at how fair or unfair just life is globally. My goal would always be that Bitcoin is a globally used monetary system, which might be on regulated rails partly, but which also hopefully still keeps on unregulated rails, always somewhere globally, so that we don't get lost, that we do not lose the permissionlessness and the optionality for everyone to use and to hold Bitcoin and to profit from not being exposed to a inflationary monetary system.
That's an interesting point. And also, I mean, you mentioned it before we started recording, the Jeff Booth thing, because I feel like more and more Bitcoin will be actually an indicator for macro and will actually show what's actually going on, because this is the only thing that is not changing. I mean, that's what we are been saying since the start of Bitcoin, basically. This is the best measuring stick. That's the only one that's not changing. And you mentioned that you are currently with AI seeing exactly what Jeff Booth has been talking about since, I don't even know when the book came out, The Price of Tomorrow, but it's been a few years, I think. What are you kind of seeing there with Bitcoin and AI and the Jeff Booth theory?
Yeah, I mean, exactly. I think it was 2018 or 2019 when Jeff Booth released The Price of Tomorrow, and the main thesis was that we should look forward to the, let's say, the information age, to robotics, automation, and artificial intelligence, making everything cheaper day by day, because it will enable more and more people in the world to live in a certain status of wealth, because everything becomes cheaper. And he has seen that, but he also, in the same book, ironically, before himself understanding Bitcoin, that's when he wrote it. But in the same book, he says, if we run into this, let's say, timeline or epoch where AI and robotics like dramatically change productivity and change prices, if we run into this age with a fiat monetary system, we will run into huge problems, because like the central bank's mandate is price stability, right? And if you run into an age where prices maybe one day fall 10, maybe 20% a year because of productivity gains, and central banks do not give up their mandate and say, okay, this doesn't make any sense. It doesn't make any sense for us to exist here anymore, because price stability is gone. If they do not make this and still want to give us a price stability, they will gobble up all the productivity gains. You know, the states will print so much money to be somehow able to hold the prices or keep them rising just 2%, which means all the productivity gains will land in government's hands, and they will, I don't know, as we know it, they will waste it on I don't know what projects. And as Jeff Booth warned and predicted, I see this happening right now. It's really sad that Bitcoin didn't happen like 10 years earlier. I don't know. So that we might be further in the adoption curve, because right now we are seeing exactly this. I think the AI hockey stick curve moment is right now, and we still do have fiat systems all over the world, gobbling up wealth from normal people saving in the state currency, in the government currency. Not really lots of people holding Bitcoin to save themselves from this. And I'm afraid if we don't see massive Bitcoin adoption as a savings tool, like using it for payments, that's a different story. I think that's later in the monetary development stage. But if we do not see massive adoption for Bitcoin as a savings tool in the coming years, I think as a global society, this might generate a lot of problems.
Yeah, and I think the question that I find most interesting is, what if we wouldn't have that amazing deflationary force on our prices? What if we didn't have AI, the internet, globalization, all those deflationary forces on our prices? How bad would inflation be? Like if we think about
way worse, way worse. But I mean, on the other hand, even if prices, as I said, if prices are not going down because of that, and central banks are using their price stability tools, everything stays at the same levels, while production still gets way cheaper, and this just does distribute wealth even way worse than it did over like the last 50 years. So like the Cantillon effect will get way worse, and we will really see society drifting apart in I don't know, let's say maybe it ends up 80-20, maybe it ends up 99% to 1%, some having like almost everything in the world, and the rest just living from day to day. This trend does get worse since the Nixon shock. But I think if we keep on having fiat monetary systems during the coming 5 years, it will like multiply by 10.
Yeah, and also with AI, the limitations of deflation, if a deflationary force, are kind of like endless. Like you can always, now that we have I don't want to say cracked AI, but that we have made a huge leap in AI, and we have like a lot more ground to cover. There's a lot more things that we should do. I mean, as genius AI is, sometimes also it surprises me how stupid it still is at the same time. But it's a massive leap in productivity already, and I think we are kind of in the first iPhone moment where you like have this thing in the hand and you kind of can see where this going, and like, okay, but it's not connected to the internet yet. You don't have the app store yet. You don't have all those things. And we're kind of in this first 2 years of AI, where in 10 years it's like, oh wow, yeah, I just think about something, put it there, and AI just works on it and brings me a finished product exactly how I wanted it, and just does the job. And we have all like everyone has like 10 agents running at the same time. Everyone has kind of like a small AI company where like 12 AI agents are working at the same time for you. That's kind of how I mean, at some, I mean, some already live there. I mean, some already have multiple AI agents and doing things, but it's not as consumer friendly yet. But what if it gets super, super easy to set those things up, super, super cheap to set this up? Like productivity will just go through the roof. And then robotics on top of that. Have you seen how good the robots these days are? Like handling things and like walking and jumping, like that freaks me out.
Yeah, maybe for your listeners, let's make just a fictitious easy example. Let's say you are a web designer. Yeah, I'm pretty sure in the next 1 to 2 years you will lose about maybe 80% of your projects because people just can do it themselves, right? So if in the same time your living expenses, your cost of living goes down approximately 80% as well because everything is getting cheaper, that's not that much of a problem, right? But if your living expenses stay approximately the same because states are printing money at insane levels, you will have a huge problem. You will not have any more work and will be absolutely unable to finance your costs of living. And the problem is that this will not only happen to web designers, but maybe for, I don't know, 30, 40, maybe 50% of jobs that agents might do way better than people do it. Like if you have, for example, I don't know, a big company has like 15 accounting guys. In 2 years, maybe they need 2. You know, what do the other guys do? This might not be problematic if we as a society become so wealthy that like little work can give you a great life. But if you just gobble up all that wealth as a state and as we know it, do not use it very efficiently, then that really might become a catastrophe.
It's very, yeah, and I think that's also, if you understand AI, you need to look into Bitcoin. I now realize we're speaking now probably to the wrong audience. We probably need to say that if you understand Bitcoin, you should look into AI, because most people listen here understand Bitcoin probably better than AI. I would assume so. I would guess so. But it was actually fun to see. There was a podcast on the Diary of a CEO where he talked about AI for like 1.5 hours. I think even Nico made a video about that. It was fascinating for me to see. I think through Nico, I actually saw that the podcast. And all of a sudden, the host, Stephen Bartley, asked him, hey, like, what are you thinking? What should you do if you understand that AI thing in 2045? And he said like Bitcoin, and then he had to like, I don't know, 3-minute segment on Bitcoin.
Yeah,
and that was that was so random for me. And I was like, wow, like, do AI experts understand why they need Bitcoin? It's not just our small little world that we see everything like AI, you need Bitcoin, this Bitcoin. It's also like an AI expert who does that.
Yeah. He even uses the same argument that most Bitcoiners use, right? He says like in such an AI age where everything digital, the cost of it becomes near zero. What you want to own is the only digital thing you cannot copy, and that's basically what we've been saying for like, I don't know, the last 10 years.
AI might just be, I think it's a massive accelerator of Bitcoin. I mean, it's a massive accelerator of all hard assets, because everything non-hard gets way more easily to grab. But I think Bitcoin will be the one of the biggest beneficiaries of AI, because you need money, because you need to store it somewhere. And like as you said in the example, if 80% of your web designer projects fall away, and you're saving in the wrong money, your costs are still going up by like 5-10% every year, which is a lot of like 5 years calculated. And so you need Bitcoin to compensate for that, because if you save all your things in Bitcoin, you're like, oh, I'm fine, like I have enough Bitcoin to live my life with just like the 20% of projects I get still. And also I think it will, AI has will, I'm very, because with every technology, if you think about the tractor, for example, there was a lot of people working on farms at one point. I think it was in America, I have some statistics with like 80% of people work directly on a farm. Now, how many people in America still work directly on a farm?
maybe 5%, maybe 6%. If it's high and you count everyone, maybe 10%. Probably the number is not that high. And so if you have that shift in like where people are working on what people are doing, I think AI might actually be different in that, where it actually, I don't know. Are you a fan of the theory of like universal basic income? I'm not, but I feel like it might be the only real like solution to that thing.
That's an interesting point. I'm not a fan of it, of course, because it's just a redistribution by the state. Yeah. But as we are in the system we are, and we do not have a free market, and the productivity gains coming through the AI age will not be seen in lower pricing and lower prices in general. It's pretty possible that a UBI is the only, let's say, the only tool in a transition phase, where we come from this fiat monetary system, over-regulated thing, to the hopefully outcome of having a mostly free market, because I think that's where AI will drive us anyway. You will not have a chance to redistribute so much wealth as you have been over the last 50 years as a state, in a age where cost of everything is going down so rapidly that it will be hard for you to like get your piece of the cake as a state. So in a transition phase, maybe this will be the outcome, that a UBI is a possibility for society to readjust readjust according to the new patterns, the new way how the world works.
Yeah, I'm really not a fan of it. But the more I think about it, it's like we are living in that system where there are few beneficiaries of the technology, and because of this fiat system, not everyone sees the price decreases. So only the ones that adopt Bitcoin, only the ones that adopt hard assets and are like swimming on the asset side and not on the on the currency side of the river. Most people, like, I'm still astonished by the fact, but most people still save in euros. Like, most people are still having the bank account and have like euro savings.
And those people are those that are impacted by it the most, right? Those are the ones governments are stealing from, actually heavily stealing from.
And those are usually also the ones that have maybe jobs that get faster replaced. Like I feel like there's an overlap there. I don't have any studies there, but like just like from my feeling, that could be the case.
Yeah, absolutely. Because I mean, saving in euros or dollars says a lot about your financial literacy, and that shows you're probably not an entrepreneur or a businessman, right? Because you have to be somehow financially literate for that.
And it will be very interesting because now AI is taking like white collar jobs, like it takes like marketing, coding, and all of that. But it will be very interesting once robotics gets combined with AI. There was an ad once done by a construction company. You might have seen it because it was a big meme, where they had like a ChatGPT thing on there and said like, ChatGPT, build me that building. And then there's like an ad for like, you can work here, your job is safe. But I'm not sure for how long, because at some point you might actually have like an interface with a robot. There's like two robots and they actually drive themselves the car to the dealerships. They get their construction materials. They drive back to the real estate property. They build actually their own house on there. and just like a month later, robots working in the sun day and night, in and out. They just like have some battery thing on there, and they just build that freaking building. And this will be an interesting point, because it 100% will come. Like human labor, at the point where a robot can replace a human worker at a construction work, this will go very fast because it will be just so much cheaper to invest in that one robot that does the same job. And the arguments for that are super, super simple. Like, you don't want to force a human being to work in the sun, have all this law things. Like, there's so many logical arguments against the human working there, also from safety perspective. Like, it's better for a robot to fall 10 floors down than a human to fall 10 floors down or something falling on the head. This will be fast. I think people don't understand how quick this can actually go.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC-free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together.
Yeah, I absolutely agree. I mean, you can 3D print houses already. They're not perfect right now, but do you think this will get worse? I don't think so. It will get better every year, better and better and better. And one day you will have, I don't know, a combination of just machines 3D printing a house and humanoid robots doing the rest of it in the house. And maybe you will not build a house without any human, but you will need, I don't know, 10x less humans than it required before, because in the first years the simple tasks can be done by the robots, and 10 years later almost all tasks can be done by the robots, and so on and so on. Like the robotics, 3D printing, and AI are like three insanely insanely good technologies, and combining all of this in several niches will just, I don't know, I'm pretty sure we will not recognize the world we live in like in 50 years. It will be insane. I'm really, really sure of that. Like our kids will see a very different world. Like they will ask us, for example, why the hell we needed driver's licenses. I'm pretty sure of that. They will be like, you were actually able to drive yourself? That doesn't make any sense. That's so dangerous, you know. And I think sometimes things like these are hard to imagine, because it has been like this since you've been born and while you grew up. But if you once understand like how many technologies are at these hockey stick levels of completely exploding and changing everything, you see that we are living in crazy times.
I actually had that thought in my mind because my fiance is Indian, so she does not have the Austrian driver license. And we are thinking about like, oh, should she get one or not? And currently we live in a city, so we don't really need it. But I was already thinking like, maybe she doesn't need it at all. Like maybe we can just wait 5 years or maybe 8 years or something like that, and she can just like get the robotaxi going, and the next 8 years I can drive her around. And we anyways live in a city. Like she barely would need. Like there was not one situation yet in the last 3 years we have been together where she would have needed to drive a car. And so the thing is like maybe she never needs to do it, even if there would be a good situation, because the driverless cars. I mean, in Miami, I was already driving with the Tesla self-driving thing. That thing freaked me out. Like it was so perfect that I was like, wait, we are already that far? Like I was an investor in Tesla before Bitcoin, so like 6 years ago. Man, that was a long time ago. And back then there was always a talk of like this like robotaxi network and like the AI will drive itself. And I was like excited about it, but I also was very skeptical. And now I went to the Tesla dealership, said like, I want to test that AI thing. And he's like, oh, here you have the Tesla Model S for like an hour. And I was sitting in there, going on the road and just like putting some destination, put the lever 2 times down, and it was driving me there through everything. I was so scared. I was sitting there like a fuck. But like it was super easy. And my fiance was also sitting with me, and she preferred the Tesla driving. It felt safer for her than me driving, because I was not used to used to drive on in American roads and all of that. It was a new car also for me. I was never driving the Tesla Model S. But honestly, I also felt safer because it was feeling like it's on like shit, like on rails. Like it felt like it's driving on rails. It's not like slowly doing that. Like it's not looking outside. Like I'm looking on the Tesla, I'm like, ooh, wow, nice car, like all of that. The Tesla is just like driving. It has like 8 cameras around it. It sees everything. It takes a nice distance, but it's also not slow. It's like it drives fast. It drives like a nice, like how someone would drive a car nicely. And so I was super astonished, and I think like it's just a question of regulation at this point.
Absolutely. I mean, imagine having like a year or two of track record of those cars, and their statistics in car crashes and stuff. Then the market pressure will be so heavy and high that there will be no other option. Like, I mean, why would anyone? Why would anyone, or maybe your assurance? Why would they not force you to please let your car drive itself if they know it reduces risk of a car crash by, I don't know, 80%? No brainer, right?
I saw. I was last year in Vegas, and by chance I was walking outside while the vice president actually arrived. And this was like fascinating for me to see how like the whole thing was like 20 minutes, like they blocked the whole road already 20 minutes before, and then he was coming, and all the motorcade and all of that. Like very impressive to see it in real life. I only saw it in movies so far. And I was thinking, in 20, 30 years, everyone will drive as safe as the US president now with his car. Like the US president, a car accident, him having a car accident is like basically zero. Like it's like almost impossible. Like too many cars and too many people watching around him. And the same, I think, will be true for everyone in like 20 years. Car accidents will be, if there's one car accident happening whole of Europe, it will be in every freaking news cycle because like a car crashed. Like that's like, wow, like how did this happen? Like who's to blame and all? Like it will be so rare. And now it's a car accidents like happening every single day in every small country, almost in every small city every single day. So I thought about that thing where technology will allow the common person to have what a rich person had 50 years ago, 100 years ago, and more than that. I mean, now everyone can fly. Like everyone that listens to that now could probably type in like some flight thing and can buy themselves a plane ticket to whatever country or state they want right now. They probably have that ability. The richest man alive 100 years ago didn't have that.
Exactly. And what you just said, progress and prosperity, that is what progress and prosperity is, right? Everyone being able to have what maybe now only the rich can have. And that is what I think what progress and productivity gains would, and that we've been talking about, is would enable for most of society if there were not this fiat monetary system, maybe preventing it, at least delaying it for years, maybe decades.
I have another thought. Housing is super interesting because if you thought about it, Bitcoin is kind of sucking the monetary energy completely away from real estate. Like it will be super easy to invest in Bitcoin instead of real estate. I've probably had 20 guests of maybe more that describe their journey of selling real estate to buy Bitcoin. That is a very common theme actually on my podcast. And then another thing that I just thought about it while we were talking about AI, build me that building. AI is sucking the cost out of building real estate. So like, I think housing will be super freaking affordable. Like everyone will just like, I want to have it that way and like this way. The only scarcity in housing will be the ground. And there's a lot of place we can still build houses. I think we have plenty of space on Earth. Most spaces on Earth are not populated at all.
Absolutely. I mean, just imagine that housing has been becoming more expensive over the past, let's say, 20 to 30 years, while producing houses has become so much more efficient. That doesn't make any sense. And that's just because, of course, there are regulations. A wall has to be that thick and stuff. That also makes it more expensive. That's also true. But you just see that over this time, real estate has been monetizing, has been getting this monetary premium, has been an option to save purchasing power, which it should not be there for. Housing should be either a thing of property because I want to own my house. I have it. It's in my responsibility what I do with it, or it should just be a plain service. I just want to have a roof over my head. I do not see why this should be why it should be almost unaffordable for people to just rent a flat somewhere. But we've come to those levels, like even here in Germany. Renting a flat is super expensive. Not even something huge or exclusive. It for the most people it makes up 50 or more % of their income if they are single, just living somewhere, which is pretty insane.
100%. The last topic I want to get into with you is the least fun topic, I think, is your outlook in Bitcoin in Europe, especially with taxes, regulations, and all the things that you're seeing. I've came to know that Americans actually are really interested in how Europe is developing in the Bitcoin scene. And you are not only like a European that is into Bitcoin, but also you are with Coinfinity, you've followed the MiCA license, and you probably know regulation and taxes better than my American audience does. What's your outlook on Europe, Bitcoin, taxes, and regulations? What are you kind of seeing?
Yeah, I mean, since we're sitting in Europe, of course, we need the MiCA license just to operate, which does not mean that we, or especially I, are fans of it, right? I think Europe is over-regulating in many ways, but also I can understand this because at certain points, at certain stages, fiat monetary systems are somehow like cornered. They do not really have a choice. The more a currency or a state or a group of states has overregulated and artificially created those boom and bust cycles, the more this entity is cornered and has no other choice than to regulate more and more and more and more and more, because otherwise capital will go somewhere else. It will go away from those bad circumstances. Of course, with our knowledge, what we would do is like turn the opposite way and say, okay, you know what, we will go the free market way right now, and maybe we can fix this broken system again. But that's just not how these big states work. They build such an overhead of bureaucrats that wants to be paid for, that the only way this system sees is regulating more and more and more. That's why I sadly do not think that the EU, the way it's currently working, let's say, is on a good route, is on a good way. In Germany, for example, we still have Bitcoin, selling Bitcoin being tax-free after a year holding period. I really doubt that this is still existing for the next, I don't know, 1 to 5 years. They need to get to capital. They need to get to the people's wealth to finance all this bureaucratic overhead. So I really think, I mean, I'm not a politics guy at all, but I really think the US had made some kind of U-turn there, trying to push regarding at least freer markets, still not really free markets, because politicians are politicians. But the EU really is on a really bad route regarding that. And the problem is, I don't really see anyone in Germany or in Europe like trying to do, let's say, the Millet thing, deregulating, letting markets doing their work and building prosperity for citizens. I don't know what needs to happen and how bad it has to be until people get back to the roots of individual freedom and therefore market freedom. But for the moment, I don't really see it in the EU, unfortunately.
Yeah, I share that mostly. It's sad because Bitcoin will drive a lot of innovation, and Bitcoin will drive a lot of interesting new products and services and ecosystems. And there's so much already happening in Germany. There are great products coming out. There are great things coming in the ecosystem. And without the state letting the people be and just letting the innovation drive, I think we will drive all the innovation, all the products and services and ecosystems again, like we did in the internet revolution, to America or to other states. Doesn't need to be America. Currently sees like that it's America. I mean, we can now see it as a good or bad thing what strategy is doing. But there's a lot more. There's a lot more Bitcoin accumulation happening in America, like with American companies. I think also with American individuals, even though I don't have data for that. But there's just like a lot more happening on that front, and I think this will just keep on happening until we get that we need innovation to thrive in Europe. Even though I came to this conclusion fairly recently, I want to live in Europe. Like, it's such a nice place to live. I've traveled a lot around the world because of Bitcoin conferences, like America, Dubai, Abu Dhabi, Asia. Like I've been to a lot of different places, and I always come back to the conclusion, like, just from a pure life thing, I just love like the Austrian greenery, just like being in even Vienna. Like Vienna is an amazing city. And then I look at the regulation and the companies. I'm like, great that I have remote work and all my business is actually in America, but I can live in where the food is good and all. Because this is another thing. Regulation can be good. For example, with food, there are a lot of Americans that are envy of how strict we are with food regulation in Europe, because they have all that shit in their food and they have to be really careful with what they buy. In Europe, you can be a little less careful. You can be a little less like, I'll just go to the supermarket and grab some things, because we have very strict rules. Like things that are completely forbidden in Europe, they put it in American everything in there. I've talked with a few Americans, especially health experts, that are envy of that kind of regulation. So regulation doesn't need necessarily to be bad, but it gets bad if it hinders innovation and hinders companies to thrive, because then all the economic value is somewhere else.
Yeah, although one point I'd have there is, I don't know. A truly free market, there'd be other ways and tools, how people will find the better foods and identify the bad foods. So from my side, no props to state regulation on that side, but I totally get what you're saying. The health and nutrition thing in the USA, at least from a distance, seems to be pretty bad.
Yeah, 100%. Really cool. Thank you so much, Fab, for already being on the podcast and giving us so many interesting points on Bitcoin. It's always fun to get German colleagues into this podcast. I think I don't have a lot of, actually. I've talked only with like 5 or 10 of the German colleagues on this podcast, which is always fun to have you guys also on the podcast, not just the English speaking ones. Yeah, really cool. Before we end, as you know from the previous one, or might remember from the previous one, we have an end routine where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the question from the previous guest is, what is one expectation you have about Bitcoin that you think not many in Bitcoin share?
Medium of exchange and unit of account will come by themselves. It will just come when store of value is mostly established. Market demand will be enough for that to just come from itself. That's not something we have to worry about. That's something I would say.
I love that. I really love that point, because I share that too. And I sometimes I'm mad at people. It's like, oh, you have to spend and replace, you have to do this. And like, it's fine if you do it. And I earn actually a good amount of my income already directly in Bitcoin, and that I use to spend as much as I can. I have to sometimes convert it into fiat to cover fiat bills. But so I would love to spend more Bitcoin so I don't have to pay the conversion fee every time. But I don't think we need to push it. I think it's great if people push it. I think it's awesome if people ask, like the restaurants, like, hey, can I pay in Bitcoin and this and that? But the game theory is completely aligned. Like once you accumulate Bitcoin, you have it as a store of value. Naturally, you want to spend it at some point. You want to use it, and so you are trying to figure out, okay, how can I get paid in Bitcoin, because I don't want to have this other thing. And you trying to get like, how can I pay it? And so the incentives is very, very aligned. And I'm actually shocked by how far medium exchange already is. Like there's in Vienna, that's delicious. You probably know it. The burger thing. They have more than burgers. I usually take the burger. It's not just a burger thing, but it's a great restaurant. And I always pay there in Lightning. And I'm like, that's already possible. Like that's freaking amazing. I'm shocked how far we already are with medium exchange, given that we are, I think, at the beginning of store of value phase.
Absolutely, and that's why I've been saying this. I mean, of course, it's great if some people do stuff for the medium of exchange adoption, like Jack Dorsey did with the Square terminals and stuff. I love that, but as you see, this is just the sum of all individual preferences, and it will just happen.
100%. Then yeah, thank you so much, Fab, for being on the podcast. Before I let you go, where can people find you, ask you questions, and reach out to you?
Thank you as well. It was a pleasure. I hope I could express all my thoughts so that you guys can understand them. You can find me mostly on X. My handle is @fabthefox. You will find everything I'm doing on fabthefox.com, which might be the easiest and quickest way to find what I'm doing and why I'm doing it. Yeah. And as I said, thank you. And hopefully we'll see each other soon again.
Awesome. Thank you so much, Fab, for being on the podcast. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.